Greetings again, amazing traders, and welcome back. Today we are going to be doing a market review for pound dollar for Tuesday the 18th of February and Monday the 17th of February 2025. So at the time of recording, it is Wednesday the 19th of February 2025. But before we begin, I just want to take a time to thank a lot of you who have been following along consistently. Thank you so very much. And for those of you who are new subscribers, I say thank you. To those of you who are old subscribers who still come to watch my videos, thank you so very much. I don't take this for granted. We are currently at 84 subscribers and the channel is growing gradually. And those of you who have been supporting and subscribing and watching the videos, thank you so very much. So if you have been confused, I just want to show you how you can follow up, okay? When you come to my channel, which is LAN_GNOFX, what you simply have to do is you have to come to playlist. When you come to this playlist, you are going to see a small money concept for beginners. Basically, everything that I've been doing all of this recently, or all of this while or recently, is focused on this first playlist, which has a total number of 20 videos. So you could literally just come to it and you scroll right down, or you can watch the videos even from the start, okay? If you can take like a week, you'll be able to watch all of these videos. It's really going to help you so that you are able to catch up with everything that I'm doing currently, especially the video or the ICT Power of 3 explained. This is the video that is the main driver to everything that I've been doing, the market reviews, the Asian range, everything is centered around this video, okay? The ICT Power of 3 explained. Please do well to watch this video so you'll be able to follow along with everything that I'm doing, okay? All right, thank you so very much. So let us go back to the chat. Please don't forget to always like my video when I upload them, so that the YouTube algorithm can recommend the video to a lot of people out there, and by so doing we will be able to grow this channel. That is all I can ask from you, please. Thank you so very much. Thank you. All right, let's go back to the chart and see what we have for today. So we are going to maintain the same strategy that we've been doing already. I'm currently looking at pound dollar 15 minutes time frame, so we'll still apply the Asian range, and everything that we have been doing, we are going to apply it here, okay? So what we are going to do is first make sure that your session breaks is toggled on. Mine is toggled on. The only difference is that I have reduced the opacity of the vertical line, so toggle this on, and we are going to again remind ourselves that the Asian range is going to start from 8 p.m. to midnight, and we are going to pay attention to the midnight opening price, and we'll see how price is going to behave there. So this is the Asian range. Again, you take your vertical line and you put here. If there's another way you can do it, you can do it, okay? But this is by far one of the easiest ways for the beginners. So you put your vertical line at 8 p.m. New York time, and you put the second vertical line at midnight New York time, and then you are going to pay attention to the midnight opening price and see how price is going to behave there. And we said already that if you are bullish, we want to buy at or below the midnight opening price, and if you are bearish, we want to sell at or above the midnight opening price. So what we are simply going to do is we are going to mark this range. Everything that happened here happened during Asia, okay? This is the Asian range, and we have been using gray as our default color, so we are going to maintain that so that you are able to follow along very well. I'm going to remove this vertical line, or this horizontal line, and I will drop down to the 5-minute time frame so that we can see exactly what I'm doing here. So when we have successfully marked our Asian range, we are going to pay attention to the midnight opening price, okay? And we are going to extend that across. Please make sure you watch the video that I just showed so that you'll be able to follow along, because I'm not going to do a lot here. So let's use 2 pixels so that it is visible. I'm going to do it this way. So now, what is the goal? The goal is, if we are bullish again, we want to see the market trade below Asia. Why is it trading below Asia? It's going to take all the sales and liquidity that is resting below Asia, okay, that is actually a market protraction or a manipulation. Remember the strategy. What is it all about? Accumulation, manipulation, and distribution. So we want to see a form of manipulation by the market trading below Asia and grabbing all the liquidity below Asia, and then we are going to look for what? A market structure shift, and we are going to be buying preferably in London. Remember, the accumulation is going to occur during Asia, the manipulation is going to occur during London, and during the New York session we are going to look for the distribution. This is actually the accumulation here, and then the manipulation is going to occur right down here, and then we are going to be paying attention for the distribution that is going to occur during the London session. So enough of the talking. So if you wanted to take a trade, this preferably would have been a good trade after seeing a run on this sell side liquidity, Asian low sell side liquidity, and trading into this bullish order block down here, this down close candle, right? This is a bullish order block, this series of candle, which is actually a 5-minute bullish order block. So we are going to be buying right down here. Look at how many opportunities the market gave you. 1, 2, 3, and 4. Okay, so you could take any one of these entries and it will still be okay. So we are going to be looking for buy opportunities right down here. That was on Monday. And what is again our target? Our target usually is just what? One standard deviation. And what do we say one standard deviation is? We are simply going to take the Asian range, which means the high and the low, and we are going to project that upward, and that is going to be our lowest hanging fruit. Okay, according to the founder of the smart money concept. All shout out to him, Mr. Michael. So this is what we are going to do, and we are going to look for one standard deviation above this Asian range, and that is going to be our profit objective. So I'm going to do -1, and if you did that correctly, this will have been your profit here, okay, which is 1.26145, and that was a total of 28 pips, which is totally okay, right? It's totally okay. So that would have been a very good trade for Monday. And look at how many standard deviations the market actually went. Let us look at how many standard deviations the market actually went on Monday. So we are going to do -2 and -3, like so, and let's see what happens. If we do -2.5, I'm sure that is going to be okay. -2.5, and then we are going to take out 3, and let's see what happens. I'm sure this -2.5 here, yes, which is at 1 point. Let me do this. Good. You see, look at how the market hits -2.5 beautifully over here. You see that this -2.5 standard deviation beautifully hit over here, right? Beautifully hit -2.5, which is 1.26348. Accurate. This is just to prove to you that the market is actually run by an artificial intelligence and not buy and sell pressure. Otherwise, you are not going to be having all of this level of accuracy. And it did not just hit that; it actually ran the previous day, the previous week buy side liquidity. We have buy side liquidity resting above here. So previous week's buy side liquidity was taken. Okay, it was taken, and that was a very good trade over there. Let me put it to the left. Okay, so this will have been a very good trade, but remember, we are only targeting one standard deviation because we are starting. Okay, one standard deviation. So this will have been a very, very good trade for Monday. As soon as it did 2.5 standard deviation, look at how it reversed immediately, shifted structure, created a fair value gap here, and then dropped. Okay, so that would have been a very good trade for Monday, and we have made a cool 28 pips, which is totally very okay, right? Now let us look at what happened on Tuesday. Again, we are going to do the same thing. We are going to pay attention to 8 p.m., which is New York time, from 8 p.m. to midnight, and we'll see. Please do 8 p.m. okay, 8 p.m. to midnight open. This is midnight open here, and we are going to mark the high that was formed during that session and the low. I mean, this strategy is not very difficult, right? If you have been following along, you realize that it's not very complicated. Yeah, you can just use this as your model, and you never get to worry about anything in forex. Yeah. So the next thing is you are going to pay attention to what the midnight opening price, and we are going to extend that across again. Okay, you can extend it right to 3 p.m. okay, there's no problem, right to 3 p.m. Watch the previous video so that you will know exactly everything that I'm doing here. Now, what is our goal? We want to see a run on Asian low sell side liquidity, and we had it here. Okay, this one here is actually the manipulation. If you wanted to trade like the first sessions, okay, this will have also been a very good trade here. And now, what are you going to do here? You are going to look for buy opportunities. If you can see a market structure shift on a smaller time frame, this is a market structure shift here. The moment this high was taken, this is a market structure shift, and then price returns back into this what this bullish order block. These two down close candle, those are bullish order blocks. So you could be looking for buy opportunities here. And let's see, unfortunately we do not have like one standard deviation, which is totally okay. Sometimes it's going to happen, okay, but even if you targeted just these Asian highs as your draw on liquidity or as your profit target, you will still be okay, right? How many pips? This is 25 pips. I mean, if you wanted just 10 to 15 pips, this is already 20 pips over here, or 18 pips. I mean, this is totally okay, right? We are not looking for a lot. This would have still been a very, very good trade for you if you traded on Tuesday, right? I mean, it's okay, right? But unfortunately, we don't have like those extensions for the standard deviations, and it's going to happen sometimes. You're not always going to have it perfect all the times, okay? So that's something we should know. We are not robots, so we are not being stereotyped. We are also following what the market is showing us. Let me toggle this off so that we don't get things mixed up. And this one also should be off, okay? Yeah, so we didn't make it up to one standard deviation. Okay, let me say you did not take the buy, okay, and then you waited for the sell opportunity. Let us take away the this one. Let's say, okay, you waited for price to, what is the condition again? If the market takes Asian highs buy side liquidity, we are going to wait for what? A market structure shift. This buy side liquidity, Asian high buy side liquidity. I should not be writing this, okay? Buy side liquidity for the Asian highs, yes. So you could still wait for a market structure shift. Someone who did not buy, okay, can still sell over here. Where did the market structure shift occur? The market structure shift occurred right here, right? And then you could sell here. Let me show you this. You could still sell here, okay? If you go to the lower time frame, you could still sell into this fair value gap, or you could still sell here. When this market structure shift occurred, price came back into this fair value gap here and this other block, so you could still take a trade here. It's totally okay. But for those of you who know what to do, you could still sell over here, right? And then you target this Asian lows, sell side liquidity right down here, this lows here. That would have still been a very good trade. But look at how far the market went. The market went down 31 pips, okay? That would have still been a very, very good trade. In case you did not take a buy, you could still take a sell, okay? So it just depends on which opportunity that presented itself to you and when you came to the market too, right? So these were two very good trades for Tuesday here, right? And again, for somebody who did not trade all of that, look at how many times the market reacted to this midnight opening price. Let me highlight it so that you can see very well. Look at how many times the market came back here. What did I tell you? I said you can also buy at, see, the market came here, right? After taking all the Asian low sell side liquidity by running down here, the market shifted structure, came back into this fair value gap. So you could still be buying here, right? That was still another opportunity. You could still be buying here. Even if you are targeting 10 to 15 pips, you will still make it. I hope that is understood. Now, someone who did not see that opportunity, what time is it of the day? It's about 3 p.m. Remember, the market came back again to the midnight opening price, which is your gauge for the day. We saw a shift in market structure here, and then the market came back into this fair value gap. There's a small fair value gap here. You could still be buying here. And now, look at what is currently happening. How many pips has the market gone all through? 39 pips. So you see how many opportunities that the market will present itself to you using just the Asian range and using the midnight opening price. So I am just showing you this thing so that you don't depend on one thing. You can use a multiple of institutional reference point or PD arrays to take trades in the market. It doesn't necessarily have to be the Asian range. You can also pay attention to the midnight opening price, which is something I've been insisting a lot. And if you have been following along, you will see that these things really work out a lot. But here we do not have the luxury of standard deviations, which is totally okay. Like I said already, you are not always going to have it all the times. Now the market did not go down one standard deviation. We did not see that happen, but it went about half. Okay, let me do this setting so that you can understand what I'm saying. Let me do negative in case you don't understand the settings of this indicator or this Fibonacci tool. I have a video. Just follow the videos I showed you on my YouTube channel. You see it here. So you see this is negative a standard deviation, negative 0.5 a standard deviation, half of one standard deviation, which is 1.25844. See how the market hit that level beautifully here and then took off. So sometimes you can also take one standard deviation and then you divide it into two. That could also be a possible profit target, right? Now you see how we hit that level beautifully and then the market took off from there. Thank you so very much for watching. I don't want to make this video very long. I hope that you found value in this. Please make sure you like the video so that YouTube can recommend it to other people. And if there's something that you want me to do, please you can leave it also in the comment section. Thank you so very much. Hopefully we'll meet on Friday when I will do another market review for possibly Wednesday, Thursday, and Friday itself. Thank you so very much and stay blessed. Goodbye.